Welcome back, financial explorers. Today, we're diving deep into the labyrinth of numbers, uncovering the mystique surrounding Brookfield Corporation. Buckle up because this ride's about to get wild. Okay, let's kick things off with PRTTM, standing at a whopping 67.02. Translation? Investors are shelling out $67.02 for every $1 of earnings. Yikes, seems like the price of admission is sky high, doesn't it? Fast forward to PRFWD, a more modest 10.48. A sigh of relief, perhaps? This figure hints at a brighter future, where investors might be paying a more reasonable $10.48 for those future earnings. Hold on to your calculators, folks. PG stands at 4.79, indicating growth might not be coming as easily as we'd hope. It's like trying to squeeze a watermelon through a keyhole, awkward, messy, and not very efficient. Remember that a value around 1 is when a stock can be considered undervalued. With insider ownership at 17.98%, it seems like the bigwigs are keeping a close eye on their baby. Continuing with the return of equity at 2.52% and return of assets at 0.24%, shows that Brookfield needs to make an improvement if it wants to attract new investors. These numbers indicate how efficiently BN uses its shareholders' funds and company assets to generate earnings. And with a return of invested capital at 4.3%, also indicates a necessity of improvement. Speaking about earnings, the earnings per share or EPS of 1.14 with a next 5 years forecasted growth of 14.00%. The plot thickens. But wait, the evolution of earnings per share over the past decade? Roller coaster vibes. With a compound annual growth rate of -6.36%, it's been a bumpy ride. Now, the free cash flow per share had its heyday until 2020, then plummeted like a lead balloon. A compound annual growth rate of -0.97%? It's like watching a magician's disappearing act, but with money. With a dividend yield of 0.85% and a 10-year growth rate of 2.3%, the dividend's a mixed bag. But hold your horses. Inconsistency alert. Last year's free cash flow payout ratio exceeded 100%. Pass the popcorn, this drama's heating up. But wait, there's more. Operating margin? Profit margin? We're hitting the jackpot with 18.95% and 0.94% respectively. BN knows how to generate earnings from its operations, but needs to improve their margins in the near future and reduce administrative costs. And folks, we're just getting warmed up. Earnings and revenue evolution stuck in neutral for the past 2 years. Talk about a snooze fest. No wonder Brookfield's market price hasn't been keeping up with the Joneses, obtaining a lower total return than VO during the last 5 years. Now let's talk about debt, with a debt-equity ratio at 5.11, painting a picture of a company playing with fire, indicating terrible debt management, which only increases year after year. The average price return of the last 52 weeks soaring at 42.41%, it's been a wild ride for investors. But with a market cap of $63.98 billion, are they sitting on a gold mine or a ticking time bomb? Finally, the analysts predict a future price of $49.17, tantalizing an excellent future prospect with an upside of 19.96%. But hold your horses. My crystal ball says otherwise. With a fair value of $36.62, we might be looking at a case of wishful thinking. What do you think will be the fair value to Brookfield? There you have it, folks. Brookfield Corporation's financial saga, decoded for your viewing pleasure. Remember, in the world of finance, nothing is certain, except maybe the thrill of the chase. If you enjoyed the video, don't forget to like, share, and subscribe for more financial adventures. Until next time, happy investing.